Hello friends. We all know that people over the world have started investing in cryptocurrency even though given the high volatility of crypto market. For those of you who have not yet started investing in crypto, might have started at least to think about whether you should even consider it as one of the investment options. And if you do, then in this video you will get to know all that you can do to keep your investments protected if you invest in cryptos or if you think of investing in cryptos. Things might have not been going so well for many investors in crypto, especially with the recent collapse of some of the crypto exchanges like Bittrex and FTX to name a few. While billions of dollars in losses are no laughing matter, but it can help to inject a little humor into a bad situation. It makes me think of a crypto joke that is quite popular in the crypto world. It goes like the crypto market is a place where two types of people meet in the morning, ones with experience in trading and others with money. Towards the end of the day, they exchange their places and go home. Well, all jokes aside, let's get to the point and let me welcome you all to my channel Financial Fitness with CA Ashima Abel Yunus. In this video, I'm going to help you learn what you need to know about cryptocurrency as an investment option. I will help you to evaluate the pros and cons of investing in cryptos so that towards the end of this video, you will be in a position to make a wise and informed decision. The points I will cover in this video are: what is cryptocurrency? How does it work? Are cryptocurrencies legal? If yes, then in what all countries? Are cryptocurrencies safe? What are the risks involved in investing in cryptocurrencies? How to mitigate those risks? How you can protect your investment in cryptos? And in the end, I will give you some tips to protect your cryptos. And we will evaluate the pros and cons of investing in cryptocurrencies. But before we go ahead, I would request you all those who are watching, to subscribe to my channel by clicking on the subscribe icon, and do like and share this video with your family and friends. You can share it in the WhatsApp groups in your mobile phones as well by clicking on share icon below the video. As you know, this is the only way I get motivated to go ahead with this channel and to continue to come up with new videos on various topics related to financial fitness. I will just take a quick pause for 5 seconds so you all can take time to click on subscribe icon, like icon, and also click on the bell icon while I wait. Okay, so now I'll quickly introduce myself for those who are watching my video for the first time. Here I am, CA Ashima, a professionally qualified chartered accountant and a certified auditor. I have worked as a partner and a director with one of the top 25 leading CA firms in India, which has also been a member firm of one of the big fours. After working in India for a period of 10 years, I moved to Sweden. And I have also worked as a senior financial consultant with a multinational, and I have catered to clients in Sweden, Finland, Norway, Denmark, and the UK. And I have also worked as a freelance financial consultant. So before we begin with the basics of cryptocurrency, with Bitcoin, which is the most popular one, turning 10, there is a full decade of cryptocurrency codes to catch up on if you are new to the space. And I would like to quote some of the most famous ones, and we'll see what we can learn from them. There is a popular saying in the crypto world that Bitcoin will do to the banks what emails did to the postal industry. Well, that only time will tell. There is another one from Peter Thiel, and who is the co-founder of PayPal. He quoted, "I do think Bitcoin is the first encrypted money that has the potential to do something like change the world." Peter Thiel and his team had a similar idea to Bitcoin when in the process of creating PayPal. However, at the time, they were unable to get their idea off the ground. He is now one of the largest venture capitalists in Silicon Valley. These two factors shows us how and why he had an interest in Bitcoin. I will come to the second quote, which is from Warren Buffett, who is one of the greatest investors of all time and is one of the best known fundamental investors in the world, with his immense investment success, possessing a net worth of $104 billion as of March 2023, making him the fifth richest person in the world. Let's start with the basics of cryptocurrency. Let's understand what is cryptocurrency. A cryptocurrency is a digital currency which is an alternative form of payment created using encryption algorithms. Cryptographic systems enable secure online payments without the use of third-party intermediaries. The use of encryption technologies means that cryptocurrencies function both as a currency and as a virtual accounting system. Since cryptocurrency is a digital or virtual currency, it is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies are decentralized networks based on the blockchain technology, a distributed ledger enforced by a disparate network of computers. Central to the appeal and functionality of cryptocurrencies is blockchain technology. Let me explain you in simple words what blockchain technology is. Blockchain technology is an advanced database mechanism that allows transparent information sharing within a business network. A blockchain database stores data in blocks that are linked together in a chain. That's why the name blockchain technology. Each block contains a set of transactions that have been independently verified by each validator on a network. Let's understand how crypto works. To use cryptocurrencies, you need to have a cryptocurrency wallet. These wallets can be softwares that may be cloud-based service, or it might be stored on your computer or on your mobile phone. The wallets are the tool through which you store your encryption keys that confirm your identity and link to your cryptocurrency. Cryptocurrencies can be mined, they can be purchased from cryptocurrency exchanges, or rewarded for work done on a blockchain. Not all e-commerce sites allow purchases using cryptocurrencies. In fact, cryptocurrencies, even the most popular one like Bitcoin, is hardly used for retail transactions. However, cryptocurrency values have made them popular as a trading and investing instrument. Now the question arises, are cryptocurrencies legal? Let's understand the legal status of cryptocurrencies. The peer-to-peer digital currency Bitcoin debuted in 2009, introducing the concept of decentralized finance to the world. While tax authorities, enforcement agencies, and regulators globally are still debating how to control it, many consumers wonder if they can use Bitcoin legally. Whether or not you can use Bitcoin depends on which country you are in. Let's learn more about Bitcoin's legal status and how it is or it isn't regulated by authorities worldwide. Most modern paper currencies are called fiat currencies that we use in our daily transactions and tradings, including the US dollar, euros, pounds, INR, and all other major global currencies. These normal currencies derive their authority from the government or monetary authorities. But cryptocurrencies are not backed by any public or private entities. Therefore, it has been difficult to make a case for their legal status in different financial jurisdictions throughout the world. The legal status of cryptocurrencies has implications for their use in daily transactions and trading. The cryptocurrency Bitcoin has raised financial concerns for governments worldwide. Despite its use for buying goods and services, there are still no uniform international laws that regulate Bitcoin. Many developed countries allow Bitcoin to be used, such as the US, Canada, the UK. Trading of cryptocurrencies is allowed in India as well, with a tax rate of 30% being charged on them. However, the status of legal tender is not given to cryptocurrencies and they cannot be used for banking purposes. Other countries which allow bitcoins to be used are Australia, France, Denmark, Germany, Japan, Switzerland, and Spain, among others. Several countries, including China and Saudi Arabia, have made it illegal to use Bitcoin, which means these countries have banned the use of cryptocurrencies. Another question that comes to our mind is, are cryptocurrencies safe? Cryptocurrencies have attracted a reputation as unstable investments due to high investor losses as a result of scams, hacks, and bugs. And therefore, before buying or selling cryptocurrency, it's worth understanding some of the key risks involved in it. So let's understand what are the risks involved in investing in cryptocurrencies. There are about 7 risks worth considering, which I will bring to your knowledge in this video. The first one is blockchain technology, which is still relatively new. Blockchain's cryptographic nature, as well as the decentralized peer-to-peer network that validates transactions, provides some inherent security features. For example, the use of encryption with hashes and timestamps makes it virtually impossible to alter the data in a block once it's been added to the blockchain. But decentralized blockchain technology is still relatively new, and we are still figuring out how the best use can be made of it and how to regulate it. In the meantime, some criminals have been able to take advantage of the anonymity offered by crypto to scam users who may have little recourse to reclaim their assets. The second characteristic of crypto that makes it risky is that it is an extremely volatile investment. Cryptos tend to be unstable investments, so don't be surprised to see their value go up or down by very significant amounts. In fact, they have been known to rise and fall by double-digit percentages within the span of hours. Past performance isn't a good indicator of future performance as well when it comes to any risky investment, and that certainly includes cryptos. All this said, you shouldn't invest more than you can afford to lose due to the extreme volatility in crypto. The third is that cryptocurrency scams are a growing concern. Unfortunately, the world of cryptocurrency is awash with scams. Criminals may use fake apps, crypto wallets, and emails to lure you into giving up your private keys, giving them access to your crypto assets. NFT scams are also increasingly common, with some buyers being duped by fake accounts with fake names or promised royalties that never ever materialize. Cryptos themselves can also be quite scammy in nature. This was the case with the Squid Game token, which had a built-in mechanism that prevented many hackers from reselling their tokens. The fourth is that cryptocurrencies are still largely unregulated. Despite some moves around the world to regulate cryptocurrencies, they remain less regulated than many other asset classes. If a platform that exchanges or holds your crypto asset goes bankrupt, there is a risk you could lose all your capital. Similarly, your assets could be at risk if an exchange holding your crypto is hacked by criminals. In addition, cryptocurrency taxation is in its infancy, and future changes could have ramifications for your investment. The fifth is its diversity challenges. There are thousands of cryptocurrencies, and many of them are still in earlier stages of development. It's still difficult to tell the ultimate winners from the losers. As with risky investments in general, it's never a great idea to put all your eggs in one basket. If you choose to invest in cryptocurrency, it could be better to spread your investments across a variety of different cryptos. The sixth one is its technical complexity. Although the underlying cryptography is generally secure, the technical complexity of using and storing crypto assets can be a significant hazard to the new users. The seventh is that cryptocurrencies tend to be uninsured. Cryptocurrencies tend to be uninsured and are hard to convert into a form of tangible currency such as US dollars or euros or pounds or INR. So cryptocurrency is known for being a risky investment, and your assets do not enjoy any insurance cover the way they do with a bank or a brokerage firm. Truth be told, you are never immune to losses with a risk on asset. In addition, since cryptocurrencies are technology-based intangible assets, they can be hacked like any other intangible technology asset. The next risk is risk of losing digital wallet. finally, since you store your cryptocurrencies in a digital wallet, if you lose your wallet or access to it or to wallet backups, you lose your entire cryptocurrency investment. There is a risk to get exposed to digital wallet frauds. Cryptocurrency comes under many names. You might have probably read about some of the most popular types like Bitcoins and Ethereum. So before converting real dollars, euros, pounds, or other traditional currencies into Bitcoin, which is the most popular cryptocurrency, one must evaluate the risks involved in using cryptocurrencies, which we just did, and also spend time to understand how you can protect your investment. So make sure you consider these risks before you decide to invest in crypto. Now let's come to the most important part of this video where we will understand how we can mitigate the risks of investing in cryptocurrencies and how you can protect your investment in cryptos. There are certain tips that can be used to protect your cryptocurrencies if at all you decide to invest in them, so you can follow these tips to protect your investment in cryptos. The first one is look before you leap. Before investing in a cryptocurrencies, be sure you understand how it works and where it can be used and how to exchange it. These are three important factors to be considered. Read the web pages for the currency itself, such as Ethereum or Bitcoin or any other, so that you fully understand how it works. And read independent articles on the cryptocurrencies that you are considering as well. Another way to keep your investments protected in crypto, you can use a trustworthy wallet. It is going to take some research on your part to choose the right wallet for your needs. If you choose to manage your cryptocurrency wallet with a local application on your computer or mobile phone, then you will need to protect this wallet at a level which is consistent with your investment. Just like you wouldn't carry $1 million around in a paper bag, don't choose an unknown or a lesser known wallet to protect your cryptocurrency. You must make sure that you use a trustworthy wallet. The third way to mitigate the risk of losing investments in cryptocurrencies is to have a backup strategy. Think about what happens if your computer or mobile device or wherever you store your wallet is lost or stolen, or if you don't otherwise have access to it. Without a backup strategy, you will have no way of getting your cryptocurrencies back and you could lose your investment. These are some of the ways you can mitigate the risk by being cautious and being well informed. Now I will come to the second quote on cryptocurrency, which is from Warren Buffett, who is one of the greatest investors of all time and is one of the best known fundamental investors in the world with his immense investment success, possessing a net worth of $104 billion as of March 2023, making him the fifth richest person in the world. Let's see what is his opinion about crypto. He says, stay away from it. It's a mirage. Basically, in terms of cryptocurrencies, generally, I can say almost with certainty that they will come to a bad ending. Well, this is not what I say, but what Warren Buffett, the legendary investor, says. Coming back to the traditional finance sector, the fact that Buffett isn't a fan of Bitcoin or cryptocurrencies in general is to be expected. Buffett's fortune has been accumulated through traditional assets and a patient approach. The risk and volatility seen in cryptocurrencies would be an instant warning sign to the famous investor. Buffett has been notoriously adverse to upcoming technology stocks, so a punt on Bitcoin isn't going to be happening anytime soon. Now, in the end, let's evaluate the pros and cons of cryptocurrencies. In a nutshell, let's look at these pros and cons. The advantages of cryptocurrencies include that they are cheaper and faster money transfers and decentralized systems that do not collapse at a single point of failure. The disadvantages would include their price volatility, high energy consumption for mining activities, and risk of use in criminal activities such as money laundering and illicit purchases. The bottom line to sum it up would be that even though cryptocurrency regulations are still evolving worldwide as it continues to gain in use and acceptance, the legislative landscape will likely continue changing as crypto matures into whatever it will be: an asset, a legal tender, a currency, payment method, or all of these. So friends, it's time to wrap up this video, and I hope you all will benefit with various aspects of investing in cryptocurrency that were covered in this video. I hope you like the contents of the video, and I request you all to please do subscribe to my channel. And I would also like to say that it's totally free for everyone, so please do it right now. Subscribe, like, and share it with your family and friends. And do share it in the WhatsApp groups in your phones as well. Also, post your comments and give your valuable feedback for this video in the comments section. Thank you and bye-bye.